On the 13th, CME did something very unique to the Bitcoin market or the Bitcoin charts right here. What did it do? So here we go. This is going to be a little spicy because I saw this yesterday and went, like, my mind just exploded and I was like, holy shit, I can't believe I didn't see this. So Bitcoin has many charts. Of course, Bitcoin trades on many exchanges and those exchanges vary. The prices vary, the highs and the lows, the volatility slightly. In general, what we see is Coinbase does most of the spot dumping. You can see that on volume, and Binance or USDT does most of the buying. So maybe you weren't wrong there about printing more USDT, my friend. However, there is another chart that we don't talk about that much. It has been a huge topic in crypto history. I'd say more so in like 2020 or 2019. This was like the Bible for trading. People don't really look at it as much anymore, but that would be CME futures, and that is the Chicago Mercantile Exchange. That trades similarly to traditional markets, as in it doesn't trade during the weekends or holidays. It has strict trading hours, unlike the rest of exchanges. And so draw your own conclusions here if this is a chart that's worth paying attention to or not. I personally have gone both ways. I've thought at times it was useless. I've thought at times it was very valuable. Not as much lately. You'll notice I haven't really brought it up. So I'm just going to throw these lines on here, and what you see are the open gaps. Now, gaps are created when markets are closed and occasionally even when they're not closed on low time frames. But essentially you'll see these values and they're showing you where price closed and then reopened in the next week, and the price that was missed, the traded prices that were missed during that time. In general, I would say gaps fill about 80% of the time, maybe more, maybe less, that's an estimate, but more than not, okay? However, I do want to preface this as well is look at Bitcoin's volatility in price, right? Look at all this bouncing. It is safe, or I think an intelligent observation to say, well, Tom, you could name any price and the odds are that Bitcoin will trade at it again, right? I mean, if you say -10 or a jillion or whatever, you know, silly answers obviously don't apply, but anything in kind of this rational area of value that we've traded, name a price, it's gone there, it's gone back. So for gaps to fill, makes sense. Simply, I mean, look at 20K. How many times have we hit 20K in the last, I don't know how many months? Many. So is it simply just, well, price tends to go back to where it was, or do these gaps really have meaning? I don't know, but there's your little preface to CME gaps and kind of gap trading in general. What I want to show you, and this is the alpha, this is the hot take, this is what you're not going to find elsewhere. You will, as other people catch on, but you're going to get it here first. Something very interesting happened. Let's see, on the 13th. On that wild volatility day on the 13th. So on CME, you can see that in June and July, it actually didn't reach the lows that the spot markets did. In fact, it only reached 18.5 on our dump in June, right here. No wick to the bottom, and that's likely, or it is because I'm gonna guess, I don't know, that the low of 17.5 was over the weekend. Actually, there it is. Yep, and you can see right here, CME traded the 17th, it closed, then it reopened the 21st, and so yes, it missed that whole wick, right? Pretty weird. It actually makes the chart very different. But the alpha here is very interesting. I wonder if anyone spots it before I say it. The alpha is this. Ignoring that low because it didn't get it on the CME gap. On the 13th, CME did something very unique to the Bitcoin market or the Bitcoin charts right here. What did it do? CME put in a lower low at 17.8. So that's actually still a little bit higher than its spot 17.5 lows that we see on Coinbase and Binance. But what's interesting is that CME broke lower. It broke out of this range while the rest of the markets didn't put in a lower low. And that is eye-catching. Now, I can't say to you, this means it's over, we're going up, you know, whatever. There's very little to draw from this other than this is very interesting, and I recommend you keep an eye on it. You'll see I have an alert set at 17.8 on CME for myself. This is pretty spicy. It did come within 2% of the spots low, and it got bought up. That is the spicy part. This is the spicy part. Let's zoom into the hourly. Everybody probably remembers Friday when we were live, this kind of wild whipsaw price action. That delivered CME to a fresh 2022 low, Probably a 2 or 3 year low. I don't even know at this point. But what I like is look at the buying response. Price pushed up. So let's tell this little story quick. CPI numbers printed and every market tanked, as we kind of expected. We've been seeing this month after month. Every market tanked. But what was very unusual Friday is despite these numbers coming in worse than expected, pretty much every market bounced. We're going to look at stocks. We're going to look at gold, see if this is true there too. This is unusual. This is breaking the pattern that we've seen month over month following the Fed. We have not seen a sell-off that gets bought up. And what I'm digging about Bitcoin here is look at this consolidation, dump. It gets bought back up above the consolidation. And what is it doing now? Well, we could argue, well, it actually kind of looks ugly. Maybe we have a descending trend. Maybe we have a lower high and we're going to look to dump back down, right? Yes, that's something that totally is reasonable to look for. But that hasn't happened yet. And what we're seeing here is a previous, let's call this resistance, dump, broken, now tested as support. If we see 19,155, and this is going to be a little different on spot, but on CME, if we see this hold, we actually have a very strong setup. We grabbed liquidity. This is a fresh low for CME, so they grabbed even more liquidity versus the spot markets. But even on spot, we see that this was really spicy. This September 21st's low, that price just wicked below, and it was a slightly lower low, which technically would be bearish. You don't want lower lows, right? That's technically a bearish signal. However, with this bottom wick, what really happened is, yes, the low was invalidated. However, it really is clearly a liquidity grab. It just barely nudged below September 21st low. That scooped up stop losses, it scooped up orders, and it created liquidity, knock on wood, at least so far, for an upside move. With a double bottom on the daily, that's looking more likely. I'm really digging what I'm seeing here. I like this. That's obviously going to be invalidated on CME. We can even say, I don't know, 18.7, 18.8 down here under that previous resistance. That's going to invalidate this potential setup. But so far, I'm liking it, mostly because, well, we had a sell-off, but we're back higher than where we started from that sell-off. It seems to be holding as support. And we have this huge liquidity grab, tons of orders trapped. I like it. When September's low broke, by all means, when the September low broke right here on the 13th, a few days ago, we should have expected the market to dump, right? We would have expected it to dump under 17.5 to break the low. We have kind of a macro weekly, monthly low that breaks, and to see it dump into previous lows down below 17.5 was the logical, or at least the emotional expectation. It didn't happen. That bottom wick shows that buyers were very much interested at that price, and they defended these lows.